Good evening all. We have seen a slight reduction of bearish volume. It tells us that the bears are getting squeezed out and they're being liquidated. But the thing was with this, it's really France that have shifted there. So in the ideal world, we'd probably weigh them a bit differently because the US 500 is significantly larger than the France 40. But we've always done it like this. We've always treated each index equally. But that's the reason for the big movement. They were really, really bearish, and now they're just bearish. So they've got squeezed out of France 40. Also note that the dollar is gaining a bit of traction. It's getting quite green now, so that's of note. And AU is more of a sell than it was from last week, and GU also. And cross yen are becoming more of a buy, which I'll show you the rate of change. We can talk about the rate of change after this bit here, the tickers. So VIX got crushed, which is kind of typical, and indices have done quite well. So it's a little bit misleading about this metric here, but we've always treated every index the same, and that's how we've always done it. The last 3 years, we've always treated every index exactly the same with the equal weighting. It might be worth thinking about changing the weighting, but we'll see how we go. If we're going to keep pumping on risk appetite and this is giving us a little bit of a phony reading, then we can look at the weighting, the weighting elements, because we've weighted the indices differently technically, so we should probably do it on the sentiment. Kind of makes sense. The only trouble is any change on this is going to impact quite a lot of stuff because there's a lot of people who use the risk calc. So if I make any change on it, it has to be, everyone has to know about the change. So it basically we have a different weighting for the technicals. So it kind of makes sense. We'd have a different weighting on the sentiment. If we're going to treat the technicals differently, then surely the sentiment should be treated differently as well. So it's something that we need to think about. We'll see if how we go. We can see how the indices have performed really well, so that could be a little bit misleading today because it's really the France 40 that has shifted it. I'll have to see. So like tomorrow's reading might be a bit skewy as well because minus 13. And they're going to be about -8 tomorrow, so it's going to give us like a bit of a phony reading. So we'll have to have a think about it, and if I make any changes, I'll let you guys know. But here's the herd selling AJ, CJ, Swiss J, EJ, GJ, and NJ. They've actually got quite, they've really sold it here. So because they've sold them, they're going to do quite well because someone has to take the other side of that trade. And here's the rate of change, and these would be buy signals on AJ, CJ, and NJ. NJ, New Zealand dollar yen, has actually moved the most. So if you were looking for a long, it could be that, and NU has moved the most for a sell. Okay, so could be scores, and dollar is got the best score. Okay, so do be aware of that. And the weakest one is the New Zealand dollar, which ties into the NU, which ties into that. Yeah, that's the greatest sell on the QDB scores. If we look at the basket, it's weak versus the dollar basket, which is strong. It's increased in scores. And EG always had the biggest drop. Okay, EG's had the biggest drop in scores. And the biggest increase is GC, 5 points. Okay, so that's of note. And we'll have a look at Dixie. And this is going as forecast. And the caveat here is obviously if we are going to really sell on risk appetite, this will pump. And I think really realistically, Powell's going to be hawkish tomorrow, and we're going to see a revision of the dot plot. And it's going to bolster the USD. You would think in a normal market, it should be risk off because we've got this rise in inflation. Powell's going to be hawkish and is going to probably send the dollar higher. But however, if everyone expects it and it could be priced in, and the reverse might happen. See, the market's already anticipating a hawkish Powell, but if it's not as hawkish as people have imagined, then it could actually be bad for the dollar. So it's all about expectations and like forward guidance and his delivery as well. So it's definitely a big one tomorrow, and it can be quite tricky. Normally we see reversals and rug pulls, so you've got to be quite careful with the FOMC. You see how we have actually retraced to the BC line, which would be normal. And I think we probably should be looking for buys pending that B holds, because we've actually done XAB. I think that's set in stone now. So I think we are on B to C. So where the C stops, no one knows for sure. But it kind of makes sense that it would come to resistance. Hence the grimace. I mean, we could do this, and that's not actually that strange a harmonic. I mean, if you look at this one, that's actually quite strange, quite acute. So this could be possible, but that would probably be more sensible. But that's probably okay. To be fair, that might be it. But I think there's probably a little bit more gas left in the tank. We look at the bubbles, dollar. However, look, the Euro USD and the Pound USD. Now we might see like a tag team on Euro and Pound. They might try and work together against the dollar. So I think EU and GU are going to be very, very tricky, and they're going to be worth watching tomorrow. If the dollar overpowers both of them, then that's going to be a very good sign of a strong dollar. And these are basically the dollar's arch nemesis. When these two get together, it's normally quite bad for the dollar. But if the dollar can push them away, and we'll see it on the bubbles as well. So there's going to be a big battle, and we'll know the victor, the winner of the battle, by the bubbles. So that's a pretty interesting development that we're going to see it unfold going into tomorrow. And quickly, just before we wrap up, just to say the indices, they sold them, of course, and of course by selling them, they pumped the price because they inadvertently create a demand by selling it. So if you've got a million traders selling, there has to be someone to take the other side of that transaction, and it's quite a large transaction. And the entity who's taking the other side of that trade has got vast amounts of capital, and they can push price where they want. And so it's a constant liquidity hunt and probe. And so S&P, for example, they had to sell it, didn't they? And it's just this is just representative of indices. It's not just like the ones that we look at. Whenever the herd get together and they do one thing, normally price reverses against them. So we've got to be careful. And I think the market's probably anticipating a hawkish Powell, but whether or not he's going to be as downbeat as the market's anticipated, we don't know for sure. But I think there's going to be a very interesting development going on with the dollar tomorrow, and whether or not it can shake off these two, we'll have to wait and see. So remember to trade safely. If you need me to help you, just let me know. I won't mind. I'm around all day, so just send me a message. I won't mind. And if you've got any questions, you can ask me or ask in the trading chat, and there's lots of people in there that can help as well. And we've got a classroom as well. We've got a QDB classroom, which is somewhere you can ask if you wanted to. It's up to you.